share the screen and we'll get underway. Um, so, a brief wrap up. Tomorrow is going to be a big day. The middle of the week, we've got Monday and Tuesday setting us up for probably some of the biggest moves we've seen this week. I mean, it's been a colossal day today, massive moves in the equities. And this forever fickle condition that we're in surrounding the Federal Reserve. The Fed is data dependent, so it's no surprise, however, that when we get data that is going against the grain, that we get people that are caught offside and stops going off, and that accentuates the moves and so on. So I think we saw a lot of that today with that data, the consumer sentiment, um, and indeed the JOLTS data. So the market is starting to backtrack its hawkish stance, and that's weighed on the dollar, US yields. There was an auction in the yields that accentuated the move as well, and so forth. So just looking at this dollar then, um, we chalked up the line in the sand in the morning session and we broke below and it just tumbled, didn't it? So um, we were seeing in the stocks some early signs of weakness, but that just goes to show we don't want to be the first mouse just because the market is breaking lows that it means we have to sell. Uh, there was, um, it was very tempting, wasn't it, to get involved in this the signs of a breakout. But um, essentially, what we were doing here, we were working the lows of the day, right? So when we were meeting this morning, we were in where were we? We were somewhere around about here somewhere. Okay, and we were starting to move lower. We were taking out this structure, but as I always say, when we get a displacement, we start breaking out structure. 80% of breakouts fail. So what we need is confirmation. So we were waiting for that to come back inside and give us the confirmation that indeed we were heading lower. But we had data on the radar for the day, so it made it very difficult committing to anything when we knew that we had data coming up later in the day. So we had to be patient. We had to wait for that data to come out, and we also had to wait for the Wall Street open. And lo and behold, complete turnaround and move up, which is fantastic for our day three setup. So we've got day one, day two, day three longs in the market. We've got the initial balance of the day here. This is the S&P we're looking at. Oh, you probably can't see it because I'm not showing my screen, or I am. You can see it all? Yeah. Great. So we've got the initial balance day one, Monday, first day of the week. We've moved out of that initial balance, but even though that day three, so Wednesday, could be a continuation, it's worth keeping in mind that we've got um, Friday's longs in the market, haven't been stopped out. Monday's longs in the market haven't been stopped out. Tuesday's longs, so we've got 3 days of longs in the market. So that, to me, is a recipe for a move lower. But we'll have to see. We'll have to see how Asia stacks up and London. If you're trading Asia and London, beware that moves up at this point are taking out last week's highs. And again, 80% of breakouts fail. So if we break out of those highs, it could be an anticipation, therefore, of a move lower into longs. Okay? And that's not to say that we can't move high, come inside, and continue up. And then in the US session, perhaps that's where we're going to see our move lower. But we'll have to see how things pan out. But just looking at this dollar, so going back to the dollar, Um, it's on the back foot on the daily chart. So we took out the stops on the upside and ended lower. Stops on the downside as well. In fact, let's go to a weekly chart. We'll get a better perspective on what's going on. So we've just started to correct inside bars. We've just started to correct 1, 2, 3, 4, 5, 6 consecutive weeks of uninterrupted longs, right? So all of that is extremely long and due a correction. Okay, so we've come up into resistance and we've corrected. So there should be no surprise about today's move. Right, so if we measure on the Fibonacci, it's not really until 102.20 that we might start seeing some demand. Well, I mean, with that being said, anything can happen, but what I look for is that 38.2 correction. So this is on the DXY. So looking for weakness in the dollar still from a weekly perspective, and there's still a long way to go this week with plenty of key data coming out. So we've come up, we've failed on the breakout of last month's highs over here. 80% of breakouts fail. No surprise that we broke out and pulled straight back in. So always be wary when we're breaking key levels. Be wary of the pullback. Same could be said for the downside. So if we broke out of the lows, last month's lows, a break there, what would you expect? A pullback. 80% of breakouts fail. So that's what we got here. Now we've come into support on the DXY. Let's see if that holds up. Support is this candle in here. So you've got one up candle, moves up or rejected. So this in here, there are transactions in here. The price was agreed. So this could be an area which led to where it led to that displacement moving up. Could be an area that demand is seen again. So we'll have to sit on our hands really and just see how that plays out. But technically, the US dollar is still in bullish territory. The reason why it's still in bullish territory is because it is yet to break any significant structure, which is here. So the last higher low before the higher high. I mean, you could argue it's here. In fact, I will argue it's down here. So we came up, pulled back, closed lower. These were the lows before the next impulse to the upside. So 102.92 is an important level. So keep an eye on that. If we break that, 80% of breakouts fail. It's not to say that it's going to just drop. We'd be in anticipation of a correction up to come down. So if this were to break, we'd be looking for the sells higher up. And you could probably do that on your Fibonacci. So if we broke, let's say we broke all the way down into this area here, last week's, what was that? Last week's highs, no, lows. It's Friday. Yeah, last week's lows. So we break into last week's lows, let's say. Then we can expect a correction, maybe up into the 38.2, meeting the counter trend line for a continuation to the downside. So just because the dollar is weak, guys, doesn't mean that we have to be selling. selling out of the dollar. We could well see some pullbacks at this point, so just keep that in mind. So yes, there is strength and momentum in that, but we're coming into resistance, and I'm in anticipation of a deceleration of that sell-off, right? So chasing the euro, for instance, on the bid might not be fruitful. We might be better off looking for a pullback. All right, so you might be looking to short up high. See how we get on, but plenty of length in that for a pullback. So what we could see here, potentially, hypothetically, we might see a phase of consolidation, and then we might see the breakdown, pullback, move into longs. Okay, so that could be the play for the day ahead, depending on how the data comes out. Dollar yen, same scenario really, but we've already seen that move. We said at the beginning of the day, working the highs, pump, dump. That's exactly what we were looking for. Pumped up and dumped, working the highs. So that's the 1 hour chart. We were talking about that around here somewhere. When we were meeting this morning on the lower time frame, so working the highs. And then we got that break of structure. Bosh. What a move. Okay, so this is what I'm talking about, what we might be looking for in euro dollar. Consolidation, obviously that's in a larger time frame, but so we've got pump up, consolidation, breakdown and drop. So what might we expect from the dollar yen now? Well, we've technically broken structure. So technically broken structure, come down very hard, come down into support area. What we can do here is we can pull up the technical fixed range profile and just measure the volume profile. So where transactions took place, where buyers and sellers agreed at prices. So try to penetrate through here. The point of control of this leg from low to top is this black line here. So you can refer to that as sort of the equilibrium price. And when you get a displacement like this, what are we looking for? Anyone hazard a guess? I talk about it a lot. When we displace, so when you get these big movements, you're looking for the correction. You're looking for the price to rebalance. So if it were to rebalance, where's the likely level that the price wants to rebalance to? Well, you've got options. You've got today's volume profile, which is this here. So this orange line, which tallies up to about 146.40-ish. And you've got yesterday's closing price just above there, 146.50-ish. You've got the point of control of that entire rally in and around the same area, 146.50, pretty much on the nose. So, not a bad area to target in between there for a pullback. Okay? And if we measure that with a Fibonacci, we're going to be looking for a confluence. And lo and behold, you get half of that sell-off, the 50% mean reversion level that correlates with all of that up in there. So 146.50, a lovely round number for the price to gravitate back towards, potentially moving lower thereafter. Okay, but we are technically in a bearish market, broken structure. So that trend line, that old trend line support has been wiped out, and we could be in for a move up, for a move down. So we're looking for some dollar strength to come in. It's technically out of balance. Perhaps it's going to move up, and that will support our bullish dollar yen thesis. Okay, so that would be my best bet at the moment. If it were to break all of this volume area, then it could be a fast move into test lower, but I'm going to bank on a phase of accumulation to the upside. Now, there's no guarantees, obviously. I've just given you the downside scenario as well, but just working with what is most common. So this is the bearish trend. And while we're below that, we're on the front side of that bearish trend, then the bias is lower. But if we start to see this decelerate, which we've already seen, see that on the hourly, we're now on the 15-minute chart. We've had, right, so one, two, three pushes. When you get that scenario, 1, 2, 3, you can anticipate the correction up. Okay, so the lowest low is the low. The lower high before that low is here on the 15-minute chart. What we want to see, if we're looking for a correction, is a break of that area, 146, the figure, look at that right on the nose. If we get above that, then we're technically in a corrective bullish environment. Right? We're going to get a change of character, and it might fly up, or it might trickle up. Right? Asia, we'll have to see how Asia reacts to what went on in the stock market overnight, but we could see a risk-on environment, which would make it quite difficult for the dollar to recover with any kind of real conviction. But nonetheless, we're looking for a correction, and that's fine. If it gives us an opportunity, therefore, if it's a slow creeping, grind higher, then that's great, because we get plenty of support structure, we get breaks of structure, and we can start to navigate that and get in at an optimal price for a move up. So, if we're going to go long, I need one of these. Right, so you'd be stop below, and remember, we want to be buying in the bottom quarter, the bottom third. So let's say the Asian range might be something within that. So we're going to get a new day. Okay, so everything on the right is the new day, will be Asia. Oh no, not quite. 10 minutes to go. Right. So we'll be getting the Asian market, and then let's say we move up, break structure, come down, that will be our range, and we'll be simply looking for buys down here to ride it up in the correction. Now that will only come off, we want to see, effectively we want to see, like I said, a break of structure to the upside, pull back some deceleration, the pullback, some confirmation, buy-in, up, something like that. So that's one prospect that's playing just theoretical stuff, hypothetical stuff, right? But that's what we're looking for the meantime. Um, Now with dollar yen, we are putting up the chart entirely again. So we've come out of Monday's range, we've gone either side of it. So perhaps that's the high of the week. As I said, we've got 1, 2, 3, 4 days of breakout trades. That was a failed attempt. All right, so day one technically here. So we could get a day two continuation to the downside. So this is a day one failed breakout. Peak formation, maybe the high for the week, as I said. And then maybe we're going to get that correction up to continue lower. In a day two sell-off, even though it's on so it's day two of the week, day one, day two, right? But we failed down here. So this is actually day one, day two, day three, day one, day two, day three. So this was a day three sell-off. Resets is day one, right? So day two is on what day? Wednesday. So correction up and a move down would be my bias. All right, that's understood. We've covered euro. Let me know, guys. Is there anything you want me to cover in particular? I mean, I'm guessing that everyone here is really looking for insights for the US session tomorrow, or do we have any swing traders that are looking to see what prospects there are on their positions? Dollar CAD. Right. So as we spoke about, I believe in the morning, we had stops that were taken out. Right, that was an inside day, so there were stops above, there were stops below. We came up, we came down, took out stops either side. So filling orders both sides of the market on Monday, and we've moved up. Uh, Failed to break last week's highs. We've come down. So that was the pump up and the dump. So we've got the dump, taking out stops, as I said, change of character. Now, we may have done as much work as we're going to see from the bears to the downside. Maybe not. Maybe we're going to continue lower. It helps to pull out to the daily chart. So let's look at all that. Crikey. All right, so resistance, correction time, he thinks. There's a W formation. 38.2 retracement is what I'll be in anticipation of. Take it from the lows up to the highs. 38.2. I think actually we'd probably do a 50% because we've got a price imbalance over here, and would probably come down to test last month's highs while we're down here. Why not? There's obviously going to be stops and people in here that are going to be under pressure on that move down. So W formation, correction in towards the neckline, 38.2 at least. Stops were taken out. It was a pump and dump on the day. So pump, dump on the weekly chart as well. That's what we're looking for. We're looking for the dump. Right? Everything is a pump and dump. So pump, dump. Daily chart. Pump, dump. You can measure that. So we've pumped up and we're dumping into the 78.6 as a near-term target on the daily chart. Now, if you're going to have a dump following a pump, then what are you going to get following a dump? You're probably going to get a pump. Displaced market, probably got some legs here coming down in towards this neckline of that W formation. But anyhow, be wary chasing that. You don't want to be, oh, it's selling off. Well, a bit late, really. A bit late to be joining that one, I'd say. Certainly from a risk reward outlook. So, trying to sell here for what reward? And you've got all of that risk back up to the upside. So be wary of that. Um, Again, similarly like we did on, I think was it yen, dollar yen just a moment ago, you can draw a volume profile on this leg, right? And it's going to pick up where volumes are highest down here, but you can see it because there's the structure, all of this in here. So that's demand to come in. What about the way up? What about on the way up? So if we come down to a 1 hour chart, well, we can draw our Fibonacci from the top to the bottom. I say the bottom, it's still got legs, but roughly speaking. So where it broke out of structure over here, it's around that 50%, 38.2. That's where I'd look for the price to be returning back to. Picking up all in there. Okay, so prospects for a correction, and then if it's going to continue, then it probably needs that correction up to come down. Right. Looking at the euro then, for being asked. I think we just looked at that at the very beginning, but that's okay. So talking about the rally, consolidation, capitulation of the bulls, throwing in the towel, profit taking, lots of length in the market, low hanging fruit to target, right? It's broken out of what do you call it? Last month's highs, is it? Last month's highs, last month's lows. Last month's lows. So we've broken back into last month's range. 80% of breakouts fail, pullback. Right, so looking for some consolidation here and opportunities to short. On the 4 hour chart, this, yeah. So breakout of there, pull back to continuation perhaps. So again, looking for the consolidation, the breakdown, and then the drop. But if we were to see a move into here, we could easily come back and continue higher. In that regard, we want to be looking, have we broken any structure? Let's go to the daily chart for a moment. So are we trying to break out this bearish trend? Well, we've broken structure just about. We're clipping into that structure point there. So I'll bring up this tool just to demonstrate that. This indicator. So you've got your swing high on that candle there. Okay, so we're coming up, trying to penetrate that. 80% of breakouts fail. I keep saying that. So maybe what's going to happen here is we're coming up to come down. Could be a shallow correction, but correction nonetheless. And then a move up. But technically, I'm going to start suggesting that we are now breaking to the upside. So the outlook is bullish at this point. Okay. What's going on there with that closing price? Right. Oh, it's okay. Right. So just be cautious and expect, if you're expecting this just to fly high, I think we're due in for a correction, as I said, consolidation and a drop. Or we're going to get consolidation and a continuation. What's your position? Are you holding long euro or um, euro yen? I'm being asked. Okay, good for you. From 107.80. Oh, well, you're fine, aren't you? Very nice place to be long from. Pretty much the bottom of the market. Um, Now, in that regard, 4 hour chart. See, if this market is going to come down, where are you at 80? Well, you'd expect all of this in here to act as support. So even on a correction, even the steepest, look, so if we draw a fibbo on that 4 hour, technically, I mean, even it came down to the 78.6. Where are you? Sorry, you long at where? 107.80. I mean, so yeah, look, you're looking good to me. Even if it to come down to, like I said, the 78.6, you're still protected. Um, if you were to zoom in on that leg, right, and if we went into say a 1 hour chart, you start to look at the got price imbalance. So I would say that you're probably going to be supported 108.20s. At a break of the 108.20s, then you're at risk until this order block down here, but that's below the point of control of this day so far. So 108.06, and even at the extreme, I mean, you're still fine, aren't you? Because you're below even this low, right? So I think you can sleep well tonight. Um, Euro yen. Yen. Very messy correction. Very messy market all over the place. Wicks everywhere. I do not want to be involved in this myself. Very hard to read that market structure, but pretty toppy looking up here, to be fair. Call that resistance. Not much of a fan of this one. It looks to me more like a sharp correction lower and a creeping trend up. You see a grind. You've got these candles, and it's not very much conviction coming through from the bulls at this point, because you've got the yen versus the dollar and the yen versus the euro versus the dollar. So the euro is doing well against the dollar, the yen's doing well against the dollar. So the euro is having a hard time pushing that yen to the back foot, because dollar yen is on well, yen is on the front foot against the dollar. So it's sort of stuck in between. And if anything, I'd be in anticipation of a drop. So impulse Correction, a slow correction grind to the upside that's not giving it much conviction, and move lower perhaps. So we've got this doji here, a break of this low tomorrow, today now being a new day, opening up as an inside day. A break of that structure there would leave me to believe that we need to be looking for sells on pullback. So if we break that low, then fading any rallies to come lower. If that makes sense. So as you can see, we're opening up here. These are the lows of yesterday. So we could have a scenario, we could have a daily swing high put in place. If we break that low and close below it, close below the open. So if we break that, I'd be looking for an opportunity to sell high. So fading any rallies to the downside. Right, we've got this as a trend. So we haven't actually broken any key structure yet. So as I said, 158.24 is a key level. And if we break that, then we are technically on the backside of the bullish trend. I'll pull that in, might be in there somewhere, perhaps where it breaks, perhaps who knows, if it breaks. Yeah, so bullish trend. If we break this low here, this then turns to a counter trend line, and the bulls will likely come up, try and test it again, find too much pressure from the bears, and the market will be pulling the bid and dropping. All right, so all of this is lifting the offer, pulling the bid, bang. So lifting the offer, pulling the bid lower. All right, and then lifting the offer again, perhaps into all of this trap volume up top, and bang, lower, pulling away from there. So we'll see. We've got longs, plenty of longs in the market, and we haven't had a red day close. So maybe we can get a first red day on Wednesday, and that will leave the outlook bearish for the rest of the week. On the flip side, if we hold these lows, then there are going to be prospects of a continuation higher. Let's see. Right, so we'll call it a day there, guys, and we'll get together again in the morning. We'll see how Asia and London have reacted to today's US data, and we'll take our cues from how Asia and London are set up. So ideally, we want to see the dollar pull back, right, and maybe setting us up for another sell-off in New York, perhaps. But we'll have to see. Okay, so have a great evening, good day, good afternoon, good morning, and I shall see you tomorrow.